Let's talk first tech, and just I want you to weigh in broadly. I mean, do you think this is going to be? Is this the shot across the bow?
Well, I mean, it's problematic for tech. Obviously, the new concerns about the Justice Department and also the percentages of sales that are coming from overseas. So, of all the sectors, technology famously brings in.
Do you want to own tech though right now?
So, you want to
does it change your calculus or thesis?
It wouldn't change I want to see greater clarity with where we're going with regards to the trade conversation, because the more we tighten financial conditions, those parts of the market that have been highest valued will see the largest corrections. But in a slow growth world, those parts of the tech company that are the tech sector that are able to grow greater than the rest of the economy should continue to do well.
Where do you land?
So I think it's a question of structural versus cyclical, and you now have tech getting kind of squeezed on both sides with the trade war on one hand, internal conversations about regulation on the other. Cyclically short term, I think tech could very well be challenged, particularly given the global exposure, but longer term, particularly things like software, where you continue to see a growing share of investment spending go in that direction. I mean, these are forces that aren't going away anytime soon, despite some of the short-term headwinds that they're currently facing.
Right. Broadly speaking, how much are you concerned now about this trade dispute?
I am concerned. I mean,
and by the way, when I say trade dispute, I don't know if I'm talking about China anymore, if I'm talking about Mexico, or if you want to just wrap them all into one big bundle.
I think you want to wrap it into one big bundle from an investment perspective. I mean, throughout this cycle, we've seen a slow growth, benign inflation environment with very accommodative policy. And every time we've gotten tighter on policy, we've seen financial conditions tighten, the dollar rally, spreads widen, you've seen corrections in markets. We saw it in 2015 and 16 with Fed tightening. We saw it in 2018 with Fed tightening. And now we're seeing it with concerns about the trade war. So regardless of where we're ultimately heading, we're creating a problem in the market right now because financial conditions are tightening.
And I think that's the issue. I mean, we've seen kind of the way that the trade tensions tend to play out. It begins to impact business confidence, and that impacts business spending. There's obviously a potential impact on corporate profits that we think is, with full escalation, somewhere around $2 per share this year, $4 per share next year. The question is, with the Fed seemingly engaging in this dovish pivot and labor markets continuing to look healthy, how long can the services side of the economy, how long can the consumer stay resilient in the face of this broader uncertainty? Because if you begin to see that side of the equation crumble, I think you're talking about a bigger issue.
A month ago, everybody was betting that there would be a deal with China.
Right.
Right?
Right. Most people. Yeah.
Are you still? I feel like in the back of people's heads, there's still a sense that a deal will come. It just may take longer.
Well, so I think,
and I don't know what that is, and I don't know when that is.
So I think it's important to put a line in the sand next year in November, right? I mean, we have an election coming up. I think the administration recognizes it will be very difficult to get reelected if the economy's in recession at that point in time. This year started out much better than people were expecting, right? January, we were like, oh, my goodness, we're going into recession, and then we printed 3% plus for the first quarter. So I wonder if they're tapping the proverbial brake a bit, trying to extend this cycle through November of next year in an effort to keep them in the White House.
So this was supposed to be the year of slower growth and better policy. Right. And we saw the Fed pivot, and now the uncertainty around trade. I mean, I still ultimately think that you will see some agreement, or at least an agreement to continue to meet and continue to work through this, because, at some point the transmission mechanism through the dollar, through credit spreads, it becomes untenable.